Good evening, everyone, and welcome to the Daily Volatility Box Review for August 22nd, 2019. We are TOSindicators.com, home of the Volatility Box. Today was not such a good day of trading for us in all four of the indice markets. At least for Monday and Tuesday, we did have volatility return. However, that volatility was not contained using our trading rules with the Volatility Box. What happened is all four of these trades triggered at right around the same time, which was 7:30 Pacific, right around when we had the news event, the breaking news event, where Harker came out and said that he didn't see the need for another rate reduction. This sent the market lower. We tried to catch this dip using the aggressive volatility box, which is what volatility box we were on, given the rules of the morning and the way the first hour turned out. And neither of these trades could be contained, and all four ended up being losers, as you can see, for an overall win rate today of 0%. A day that doesn't usually happen, but we must allow for in our statistical models, because while something may happen only 5% of the time, it does happen 5% of the time. And today was one of those days. So I think we had quite a few of our users somehow actually. Today was one of their better trading days. So kudos to you. You knew to avoid the red flags. We traded our rules, and today, unfortunately, we didn't end up on top. We ended the day negative with minus $2,200 and some change. And we'll talk about what actually happened in these trades. And instead of trying to go back to the drawing board, change any of the rules up, anything of that sort, we'll instead just make observations. We'll try and see, was there anything that we could have learned from this? But really, this is just another day in trading. Losses are part of it. To the users who had to actually face, to our members rather, who had to endure some losses today. It's part of trading. It's all right. Remember, the theme we've been harping on, I think what feels like this entire week now, you have to think about this in a sequence of trades, not just the individual trade. With that, let's actually get into the charts. We'll start with the S&P futures and approach this market the way we approach every market every single day. We look at the first hour of trading, and we check to see whether or not we breached either side's aggressive volatility box's entry lines. As you can see very clearly in this case, we hadn't, and that was our cue to continue to use the aggressive volatility box. We then waited to try and catch price action whenever it hit the cyan line, which it did here. Our stop was right outside of the clouds, right here, where we gave it 5.5 points of room, and our target was once again the 5.5. As you can see, we fell straight into our stop, and this we essentially got stopped at. And this was true. We'll quickly go through over the NASDAQ, a very similar setup where all of these essentially fell deep. And while we weren't able to turn the trade into a winning trade, we were able to contain our losses and limit them, in the case of the NASDAQ, to just 17 points, as opposed to what could have been a much deeper fall, at which case there was no plan, then there was no trade, and you would be panicking, trying to get out of your trade for a much deeper loss instead of the manageable 17 points, which is quite all right, because if we risk one to make one. And given that we win more often than we lose, we come out well on top. Now let's go through the Dow futures. Same exact story. The Dow fell a little less than the NASDAQ. However, it still continued to fall fairly deeply. And finally, we'll take a look at the Russell. Same story there. Yet another stop out. And so now the question is, how did we react from here? So if you imagine by 8 o'clock Pacific Standard Time, all four of these trades have been stopped at, actually well before 8, closer to 7:30, almost right. It was a grand opening, grand closing type of trade, which hurts. A lot of my friends will tell you that I hate losing, and I take almost every single battle to heart. It's just I'm a competitive person. And so this, while it sucks, again, it's important to remember, sequence of trades, this happens. But now let's say, okay, so you're at 8 o'clock, how do you tackle the rest of the day? Our plan, and we sent this out to I think a few of the members who asked us, was to switch on over to the conservative volatility box, which actually did a slightly better job of containing price action. But you see, we still fell even outside of the conservative volatility box in the case of the Russell. along with the NASDAQ. And so this to us is essentially telling us that the market really fell. You couldn't have avoided it. There's no clear magic trick. There's no secret signal that you would have magically happened to know. No crystal ball that you could have rubbed to know that, hey, today's the day that we won't actually be contained. And tomorrow onwards will be the day we get contained. You have to play the trades and you have to take them the way they come. And so we'll continue into this. So some other learning lessons that we could have seen. So perhaps if we had figured out the reason for this drop well in advance, if you had known that it was related to the interest rate cuts, then you know that the market tends to overreact there quite a bit, at least given recent times. And so that could have been your signal to change to the conservative volatility box, maybe, in which case you might have survived the ES if you had a wide enough stop. I don't really think there was a way to avoid today's activity. The losses are part of this game, part of the sport of trading. And today's losses were manageable. While they were brutal, today did suck in the sense of we didn't have a single winning trade. Our losses were manageable. We're still up quite generously for the month of August, and we'll take that as an overall win. We'll also use this opportunity in today's nightly video to talk about something interesting that happened going into the market today. So headed in to the final hour of trading, we had a market on close imbalance of more than $1 billion actually, towards the buy side. So what that actually means is that there's orders out there that institutions and larger funds have committed to where they had a buy side imbalance. And so typically what you expect there is a rise up, and the actual numbers come out at I believe 340 or 350 they're locked in, and then 355 they're locked in. And so what was interesting is we had the buy side imbalance, which did push us up as we expected. However, as the real numbers came out, or the true numbers then, the D quotes they say, ended up being an actual sell side, a small sell side, but still a sell side imbalance nonetheless. And you saw this almost immediate puke straight down, which in the moment was quite drastic compared to our aggressive volatility boxes. Didn't get anywhere close. But that was something interesting, something that usually doesn't happen, but something that was interesting to note today. And it's a fun trading fact to pay attention to these market on close numbers, just to have an idea of what you can expect headed into the close. With that, finally, on the topic of imbalance and supply and demand, we applied our supply demand edge indicator to our charts. And this is interesting. This is an interesting thing to observe. It's interesting to see it work in action. And it's nice when you can see the confirmation, because I think quite a few of our traders have asked us, hey, do you have any setups that help us get involved in this part of the move? And the answer is yes. That's what all of the other indicators that we build, that we continuously keep testing, that we back test, are good for. So if we applied the supply and demand edge indicator today on our charts, you'll see, and this is once again the 5-minute chart, that we had a bunch of sell signals using the supply demand, letting us know that there was a supply demand imbalance starting to form right up here. There was one here. There's also an arrow signaling us to go down behind these clouds. And then we saw this puke down. And this was true on both, or actually on all of the tickers. You see this same sort of message on the Dow, same sort of message, on the NASDAQ. Wow, really having a tough time typing there. Same sort of message on the NASDAQ. And then finally, same sort of message on the Russell. These are interesting things to note, understanding where supply-demand imbalances actually pan out, and then the moves that proceed after it, and then trying to, say, capture some of these moves where supply-demand imbalances are then combined with things like a news event and what happens there. So just more observations to add on, but this doesn't change anything in our trading plan or our trading rules. With that, we hope that tomorrow, Friday, will be a good final day of trading. We've had a muted week to start off, and then today, volatility returned and it really struck back. So let's hope that tomorrow, the volatility box helps us recoup some of today's losses, and we ended the week on a nice winning note. Also, we send this out, I think, to our traders last week as well, but it's important to remember that tomorrow is Friday, and wonky things tend to happen on Fridays. So if you're up on the week, protect your gains, be a little bit more cautious, be a little bit more conservative, but follow your rules, stick to the plan. And with that, we conclude today's daily volatility box video. We hope it helped, and we look forward to seeing you tomorrow. Take care.